Hi, Niket. How are you?
Good, good. How are you guys? Am I audible?
Yes, you are very much audible. Thank you so much for joining Masterstroke. This is the second time we are having this show. We met a year ago or something like that to talk about. Yeah.
Yeah, yeah. I think we met. I think if I'm not wrong, at your office on mid caps, and this
Yes.
second time. Yeah,
Yes. 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 Yeah. So I must congratulate you. I mean, you are on a roll. Motilal is on a roll, and you're doing so very well. What is the secret of your coming back so strongly, Niket?
so I think the secret I would kind of just summarize in three parts. Right, is the vision to see, courage to buy, and patience to hold.
Can you repeat slowly? This is wonderful.
It's a vision to see, courage to buy, and patience to hold.
This is a gem. This is a gem for all of you who are
So
listening to
that's
this,
very simply what we try to do out at Motilal Oswal.
and it worked.
Yeah, it worked. Sometimes it works, sometimes it doesn't work. You have to be like, I think, see, all we have to keep in mind is that like stocks or companies go through cycles, right? And also firms go through cycles and mutual fund go through cycles. And sometimes you get it right, sometimes you tend to move away from the way you think sometimes. So and then you come back. If you're underperforming, you come back on track, you make some changes, you learn from mistakes. We are all human beings at the end of the day.
How easy and difficult it is to hold the stock which are not going right.
How difficult it is? It is very easy provided the other stocks do well. Then that, if one stock doesn't do well, it's fine. But if all the stocks don't do well, then we really need to work around a lot more. Then it is kind of a firefighting situation.
All right. So, election day, exit poll in an hour's time.
Yeah.
Uh, Gap up, gap down. What's your call?
No, gap up for sure. I don't think there's any reason why it's gap down. It is a material gap up in our view. And whatever cash we could deploy till yesterday evening, we deployed it. So we now are like running at like 10 odd crore worth of cash in both the funds. We're like 99.9% invested. Uh, so yeah, I mean, hopefully we should have a much larger majority than 2019, in our opinion. Whatever, again, elections are election. We are not election experts, but to whatever understanding that we have, I think BJP should hopefully come back with a thumping majority, much bigger than 2019. Um, and that is something which market will definitely cheer. Uh, I was in Singapore last week, if not even last week, this 3 days back, and I was in US last month. I think across the board, we are seeing a lot of FIs having a large amount of cash. No one really wants to take a big bet on India at this point in time. A lot of hedge funds have degrossed. For people who don't know what degross means, is essentially there are hedge funds which buy 50, so from 100 rupees, they are 50 rupees long, 50 rupees short. In a time like this, where there is material movement, they just shrink their AUM. They put 50 rupees in cash, and of the 50, 25 is long and 25 is short. It's called degrossing. From 100, you go down to 50. So again, they are also waiting on the sidelines, right? So we will see a material movement on the higher side, on Monday, which also goes all the way to the 6th or 7th of June. And I think broadly markets will completely discount the elections by Friday. And from there on, it's business as usual. So all the euphoric part is going to get over by Friday.
But I'm
And then,
worried. Please go on. Please go on.
sorry, go on.
But I'm worried. You are launching an NFO, which is in
Yes,
between the elections. And
correct.
what is the reason? Because you already know that the market should go up. Money is still not in the coffers. You're still not able to deploy it. So why at this point of time? And you're saying the rally should be priced until Friday, and which is
Right.
probably kind of a last few days of the NFOs where you get the money at the highest point. What do you do with that?
Right. Yeah. So I think we all fundamentally believe that, for example, there are two scenarios. We launch the product before election and you launch the product after election. In either of the scenarios, I have to do well, right? I can't afford not to do well,
But
or
you don't get that
even
gap up, right? If you were so bullish in the markets, you don't get that gap up on the investors' money, isn't it?
yeah. So I think if the simple answer to that is that, if you historically backdated data to, last 10, 15 years, every day we fundamentally believe that there is a stock which is going to be a potential 100% return next year. Even on Monday, there will be a stock listed on the stock exchange. It will be potential 2x in 1 year. Every year, there is one large cap Nifty name which doubles up. every year, barring COVID, I mean, as an exception. But if you take that off, look at last 7, 8 year data. Every year, one Nifty stock doubles, right? So it essentially goes to show you that in a year where earnings growth is stronger, one large Nifty stock is going to double. There will be multiple mid caps which will be doubling and multiple small caps which will double, right? As a job, as a fund manager, our job is to identify them early, be position them early in the curve. We still believe, I think the real game to play in equity markets now is to move out of consensus, right? That's where the real money lies, right? If there is consensus that a particular company is going to do well, it's overbought, you think like everyone else, doesn't work. You have to think differently. You have to get into stocks or sectors or themes, which is not consensus. People are unable to see that today. Like telecom, we did in 3 months before. We went disproportionately overweight on telecom, right? And now telecom has started to move in the right direction. But again, what did we look at telecom? We thought that now is finally the time that, in the next 5 years, you will see 2 or 3 rounds of ARPU increase. And the government will focus on the sector because this is one sector where still there's a lot of debt. And, most of the other sectors have, seen material amount of improvement on the balance sheet side. So we went over with telecom. If you look at, post-COVID, we went over with IT, right? Then IT did very well. We went to zero weight in IT. We went over with capital goods and banking. Then we moved out of banking into real estate. Now we are moving out of capital goods, which is the darling of the street, and we're moving back to IT. So you have to understand cycles. Within the cycle or within the sector or within the theme, you have to identify which stocks to buy. Then other important part is to sell. We were bad sellers in the past. Now we've become reasonably much better sellers, not right up there, but still, we have become very good sellers. We don't essentially reduce our weight. We now go to zero. We take the entire money off the table. Just to give you some example, we bought CG Power at $50 in 2021. We sold every single nickel that we have at $645. We made 15 times in 3 years on 2 crore shares. So it's a reasonable amount of money that the firm made. It's all encashed. We book profits, we move to something else. So I think if you tend to do that over a period of time, that's how bull markets are played. Bear markets are played differently. Bear markets, you obviously have to follow more buy right, sit tight. You have to get the theme right. You have to be much more patient because earnings growth is not there. Companies' growth won't be there. And hence, if companies' earnings growth isn't there, how do you get stock price growth? So I think we have to understand that bull markets are played differently, bear markets are played differently. There's a different texture to bull market and different texture to bear market. And we will change. If the bear market comes, we will change. And if the bull market comes, we will operate the way we are.
So my next question is that since you talk about bear market and bull markets, what in your opinion, how far we are from bear market, or it is not going to come to India?
No, I think most of the bear markets in India, the bigger bear markets are always global linked. It's never domestically created. India can't create something which will impact its own country, right? In a big way. Unless until like hypothetically think about an India-China war, right? Which can have devastating impact. But otherwise, I don't think India creates a self-goal.
No, it's not about India creating, but things, a black swan event, things happen in the world.
Yes, it's quite possible. It's quite possible. And the black swan event is, there are signs of, I would say, there are signs and pockets where, there is worry on the US debt. US debt is materially moved up. 10-year of US is at 4.6, which is not great. If that moves above 5.5, the world will sneeze because money moves out of equity into debt. If you get 5.5%, a Japanese billionaire will think, here, why do I even go and invest in emerging markets? I will directly go and invest in US sovereign bond at 5.5. So those kind of trades will also happen, but all those are near term, right? That's a near term noise. We have to cut the noise. If you look at from 2002 to 2008, the last bull markets, which is what we all remember, right? Index went up by 6.2 times, point to point, right? When index went up by 6.2 times, there were 7 times where index corrected by more than 10%. And 2 times where index corrected by more than 30%. Still, the bull market was live and kicking, right? We haven't seen a 30% correction in the last, 10 years, right? From Nifty standpoint.
For a few months.
So I think we are in a good shape. I think all the macro indicators are looking super positive. And I think with the government coming up, I think the velocity of growth should come back with a vengeance. So I think there is no sign to be negative on India at this point in time. Given where the world is, I think India is clearly the shining spot. So, yeah.
So why multi-cap? Just to ensure that you have a complete product bouquet, or there's something special cooking up in the multi-cap space. You think you can do wonders?
No, I think, see, multi-cap is a category that we always wanted to do a long time back. Unfortunately, Ramdevji always believed that if your funds are not doing well, you have no right to go and ask for money. You first ensure the existing funds do well, and if all of them do well, you then go and ask to external world.
Yeah.
Most of our 90% of our AUM is now first quartile, and hence we are effectively moving out, looking out for how can we essentially look at launching new funds and create bandwidth for us. Multi-cap is an interesting category because it essentially is playing across the market cap spectrum of India, right? Large, mid, small. In a bad market, large cap will protect you. In a good market, mid cap and small cap will give you far higher returns. Interestingly, if you look at the bear market data also, right, we have generally seen that the difference of correction between mid cap and large cap is only 5%, right? It's not materially that large cap will fall 10, mid cap will fall 20, and small cap is 30. No, the difference is only 4 to 5%, right? So and the reason is also mid caps have also become larger, right? When I say mid cap is 25 to 50, 75,000 crore market cap is mid cap, and 75 above is large, and below 25,000 crore market cap is small. So, mid cap is actually the sweetest spot of the market, right? Which is where a large part of the capital will essentially go post the NFO launch. So we will have about 28% mix each for mid, large, and small, and then balance 13-14% extra will go more towards mid right now. Unless until we see a correction, we'll go towards small later on. But for now, I think we're very happy with mid.
So this is interesting because as we understand, mid caps are the most expensive part of the market at this point of time, and most of the multi caps generally have higher allocations to large cap. And you are saying that you intend to have similar exposures to all three baskets.
Yes. No. So the way it is this, that you have to have 25% mid, 25% large, 25% small. That's a regulatory cap. So 75 is gone. Obviously, you don't keep things on borderline, right? So you at least have 27, 28% each in each of the bucket. So you're left with 16, assuming 2 odd percent cash. So you're left with 14. That balance extra 14, a lot of people go towards large cap. Right now, we will largely play between the mid cap and to some extent large cap, but not towards the small cap.
Okay, nice. So you made an interesting point about IT, that you feel the flavor is going to come back.
Yeah.
We are waiting and waiting and waiting, and it is not happening. So how much more one has to wait in IT?
So I think you have to all keep in mind that large part of the IT spend is from US and Europe, right? And obviously there are a lot of uncertainties around US and Europe, uncertainties around recession, uncertainties around who is going to be the next president, and how will the policy action change. Our sense is that if US get to see Trump back, then I think you will see a lot of enterprises who are waiting on the sidelines to come back and start investing. We've already started to see early signs of improvement in growth in IT. You look at the hyperscalers, all the cloud guys have actually seen much better growth in this quarter versus the last year same quarter. And these are very early, signals that we are right now seeing, right? So clearly from that standpoint, we are started to see IT growth coming back. And obviously it'll be taking a couple of quarters, but we generally like to position 2 quarters before the cycle starts. Second is AI, right? I think AI is a second biggest innovation post internet. And I think next year AI will become very, very large for a lot of IT companies.
So do we expect that IT will be a major portfolio in the multi-cap?
Yes, we will be over with IT, but largely mid-cap IT, not the large cap IT. Because large cap IT, there's no growth. Mid-cap IT is where the growth is.
I also wanted to ask you, Niket, you also made a point that every year there's a large cap stock which almost doubles in the Nifty. So there's so much of opportunity. I wanted to ask you about the portfolio overlap, because generally I have seen that any AMC, the style, no matter, there are different fund managers, but when you see the portfolio overlap, there is still bias of the organization per se, that, you have 30, 40, 50, even 60% of overlap, even if the fund managers are different. Do you intend to add any new stock in this multi-cap, which was never there in the Motilal portfolios in the last 3-4 years, or you just have to have the same basket?
No, so I think logically we will have differentiation. All products can't look same. Otherwise, if the all products are same, then we do well together and we do bad. The entire organization will do bad together, right? So we will not have similar portfolios. But I would say that still broadly overlap would be about 35 to 40%. Logically, we will not like to cross above 40%. So I think that is where broadly we are looking at. Having said that, I think the real differentiation part of the portfolio will be in the small cap space, right? What small caps do we really buy makes the difference, right? Because and the kind of small caps that we have kind of shortlisted in terms of what we want to buy are not owned by mutual funds, right? So they're completely new. So you will see, if you look at all our funds today, the overlap between our funds and competition funds, say in a mid cap fund or a flexi fund, is only 12 to 15%. Rest 85 is brand new, right? So we do all differentiated stuff, and that's what has benefited us in the last 4 years. We don't do the traditional, mindset of buying HDFC Bank. Example, it's a great bank, but obviously going through a tough time, and the tough time is likely to last for another 18 months. The day we believe that this tough time is about to get over, we will definitely move to HDFC Bank. It's not that we don't like the bank, right? But this whole migration of the merger is going to take another 18 months. For 18 months, I can't have zero growth on 10% of my AUM. I need to move to a place where I actually make money. Then I can obviously come back to HDFC Bank after a year or 15 months, just before when we believe the cycle is going to start. So we sold HDFC Bank last year in August, and we have not have HDFC Bank at all. We sold at 1650, stock is down to 1450, and we bought Geo Financial, which is up 80%. So we made 90% on 10% of our AUM already. So that's how broadly we think. And at some point of time, we will move out of Geo Financial and move back to HDFC Bank.
Interesting. So Niket, there are so many stocks trading at 40, 50, even 100 P. Will you be owning such stocks, and what is the rationale? What kind of growth do you see in a company which is trading at, let's say, 60 P to make sense to add in the portfolio?
So if the stock is trading at 60p on a trailing basis, it should at least have a 45 to 50% earnings growth, right? Which essentially is peg of 1.1 or 1.2. We don't really want to go to more than 1.5 times peg. So that, I think, is a first thought process. I think the second important thing that we keep in mind is earnings growth, right? We do understand that some sectors inherently have higher multiples, like consumption will always trade at high multiples in India. But within consumption, we don't want to buy businesses which are growing at 10%, like a Hindustan Lever. We are very happy with Kalyan Jewellers, which is growing at 40%. So within the space, the simple metrics is whether you like IT, you like cement, you like telecom, you like banks, you have to buy companies with the highest growth in that sector. It's very simple, right? And if you can see the growth ahead of the curve, like for example, you bought Tube Investment in 2021, the margins of the company was 4%. We thought the margin of 4% can become 14% in 3 years. It already became 13% in 3 years. But could the street see at that time? The answer is no. Now when 14 became 13, that's like 3 times growth on EBITDA, only because of margin expansion. And then over and above that, top line grew. So what has actually happened is that the bottom line has grown up by more than 5 to 6 times. And then because of re-rating, the stock is up 7 to 8 times, right? That is essentially what we look at, right? We bought Zomato at $50, right? Because we could see that they can do a 2,500 crore profit in FY26, where the street assumption was negative 100 crores. So the street always thought it is like infinite P, but we thought here at 45,000 crore market cap, if this 2,500 crore is coming, then we are buying at less than 20p. So how sharply are you able to project earnings is where the game really lies.
And what do you expect to be the churning ratio in your multi-cap portfolio?
I think for us, we in the past, we have operated with 30-40% churn ratio. We're very mindful of the churn ratio in the past. But we've realized that if you get a large stock, you made 3-4x in a year, the stocks move very fast nowadays. We will book profits and move to the next stock. We will not be chasing buy right, sit tight philosophy as such. For us, performance precedes everything. First is performance. Second is churn. Third is everything else is later on. You have to get performance on a sustainable basis at the organization level, not for one fund, not for multi or not for mid cap. Every fund has to do on a sustainable basis. And there are themes being rolled out. Everyone has to essentially follow those themes. And hopefully over a period of time, we should do well.
Niket, every time somebody buys at the market top, the data clearly supports that the next 2 to 3 year returns are in single digit or low double digit.
Right.
Do you endorse this? And if yes, what is in it for investors in your multi-cap fund for the next 3 years?
Yeah, so I would quickly explain that with one single child and then a single slide, which will kind of really this slide. If you look at from 2003 to 2008, earnings growth was 25%. Nifty and earnings growth for mid-cap index was 25. The return in both these years was 27-28% CAGR for both the index. Then for 12 years, index earnings growth was 5% for Nifty and mid-cap was 4%. Return was also 7%. Right? Now the growth here is 22% and mid-cap is 36%, which has never happened in history since mid-cap index is formed. And small cap is 48%, highest ever. So what has happened is Nifty is 22%, Nifty is seeing 25% return. If mid-cap is 36, mid-cap is seeing 40% return. Right? So market on a quarterly basis or a yearly basis is only and only chasing earnings growth. So if you're able to project what is going to be the next 2 years earnings growth, which in our opinion is 15%, 1.5, our sense is market will give you 17% CAGR return in the next 2 years. Our view is that index mid-cap will see 18 to 20% growth, which means that we should also see broadly about 18 to 20% return on mid-caps for the full year on the index. Right? This earnings goes down. For example, this declines, like we saw in FY16. 415 ka 397 ho gaya. In mid-cap from 564, it went to 430. Mid-caps just got hammered out of shape. Right? So if earnings don't come, nothing can help you. But if earnings come, nothing can stop you.
So next 2 years, you are bullish that earnings will come because that is the only reason why markets can go down.
Yes. If earnings doesn't come, then markets will go down for sure. There's no option. Markets are slaves of earnings growth.
And you're confident about the GDP growth and the overall
100%.
earnings growth.
100%. I think real GDP growth, we should be more than 7.5 for the next 2 years because inflation is under control, right? Real is nominal minus inflation. So if inflation is under control, it obviously gives you a little bit of a boost to real GDP.
What are you seeing in the market in the last 3-4 days? Before the exit poll from today, markets went down crazily 2 weeks
Right.
back, went up,
Right.
and the last 3 days markets have seen subdued interest in the market.
Right.
Who is selling, who is buying?
So I think one is that a lot of FIs have been on the sidelines. A lot of hedge funds have degrossed. At the same time, given the large event ahead of us, which means that there will be material volatility, right? A lot of retail HNI people have also kind of unwinded that position. Everyone is reasonably lighter. No one wants to take a big call, and it happens only in India, right? Where elections really swing either side, right? Because it doesn't happen in US. For example, Joe Biden comes again, markets will be up or down 2%, nothing to worry. But in India, election is a big thing, right? Because government influences everything on the ground, right? Which is not the case in United States, right? So I think that is the reason why we will, a lot of people are on sidelines in the last 1 week. We have seen tremendous selling by FIs. FI short in India is probably at a record high. And I think some of this will unwind automatically if the exit polls and election results is materially different. So we will see money chasing on the other side, but please keep in mind it's going to be for a week. It is not for eternity.
That's interesting. Friends, if you have any question to ask Niket, your time is now. And people are already saying that, exit poll have started. Interesting. So if anybody already has some advanced information about exit load, please post on the chat box. So there's a question about how much BRICS going to affect geoeconomics. You want to answer that?
Yeah. So I think, if you look at the BRICS nation or even if you look at the non-BRICS nation, I think, all the geopolitical part, if it is, if any of the top 5 largest economies of the world get into direct geopolitical issue with anyone, China, Taiwan, China, India, US, whatever, then we have a trouble in hand. But if the smaller countries get into a fight, I don't think it is impactful beyond a point, right? I don't think it is going to impact materially at all, right? It just impacts, beyond 1 week. It doesn't impact beyond a week. We've seen Russia, Ukraine, look where the markets are. We saw Israel, Hamas, look where the markets are. So for us, it is noise pollution. We ignore it completely. If it is, the only question that we ask is that wo country ka contribution kya hai global GDP pe. Now that country might be supplying one particular part and that can impact one particular industry. That's possible, right? But if it is China at war, then it is a dangerous thing, right? If it's India at war, dangerous thing. India gets into a POK, dangerous, right? China getting into Taiwan, dangerous. US, China fighting, dangerous, right? So I think because the largest economy, and largest economy, when they get into a war, it impacts, supply chain, it impacts trade. When global trade gets impacted, it has, impact on everywhere in the world. It only doesn't impact those two parties, right? Because policies will materially change at a very rapid pace. So, and behavior of customers in those markets change too, right? So I think we have to be like yesterday. I saw China has came out with a circular that they will not export any defense product to anywhere in the world. It's like a big bullet, right? Now, if China doesn't supply some of the key export parts, for defense, it's quite crazy, right? That can hurt us very badly, hurt any country very badly, right? So these are, I think, things that you have to monitor, right? The China is also seeing like the world is getting into a war, and if I keep supplying parts to the world, maybe they get an advantage to hit me at some point of time. So these are things that people look at from time to time. But I think till the time the biggest countries don't get into it, then I think we should be fine.
If compliance allows you,
Yeah.
why are AMCs behind Vodafone?
Yeah. So we were the second largest investors in Vodafone
Oh,
after GQG. It's very simple actually, right? One is that we look at the whole space and what the government plans to do with that space. So government wants to improve the health of the sector. That's very, very clear. Correct. Now we have allocation to all of them. We have allocation to Bharti, we have allocation to Indus Tower, we have allocation to Vodafone. So we played the whole sector this year, and we believe this is the best sector for the year, right? Just because a 25% increase in ARPU rates increases your bottom line growth by a much higher rate, right? It can increase your bottom line growth by 35 to 40%. So next 2 years, if you take all the sectors of India, the fastest growing growth is in telecom, right? So we said we'll go where the growth is. So we'll go in telecom. Now, if you take a 25% hike this year and another 25% hike next year, which is what most of the companies are saying, then Vodafone's EBITDA from 9,000 crores goes to 30,000 crores, right? At 30,000 crore EBITDA, Vodafone becomes profitable, right? And obviously the debt which Vodafone has, there is a AGR filing always in Supreme Court. If they get a favorable outcome there, it should reduce the debt by about 40,000 crores. So they will have a 30,000 crore EBITDA and 1.5 lakh crore of debt, which they can hopefully pay in next 5 to 6 year period. And they should be out and thriving back. They should be up and thriving back. So we thought at 11 rupees, the risk reward ratio is in our favor, right? We can't lose anything because they've already raised 18,000 crores, right? So they will survive. They don't have any material outflow of debt. The bank debt that they have to pay is only 2,000 crores. Against that, they have 9,000 crores of EBITDA. So the only person that they have to pay is Government of India, and the Government of India is the largest shareholder of the company also. So this company can't go belly up because it is effectively government company going belly up. So we said at 11, there's nothing to lose. And when they did the math, if you have two price increase, which is what we have built in, then you see a 30,000 crore of EBITDA, then the stock should be about anywhere between 20-25 bucks, give or take, depends on how euphoric markets are. So we thought we can make 100% return in a year where, it's difficult to make returns somewhere else. And it's a fairly large liquid stock. You can buy and sell as many as you want in a drop of a hat. Every day, more than 1,000 crore worth of shares gets traded, right? So it's a far liquid stock. If we decide to move on, we'll quickly move out. That's not a problem.
fantastic. Any final thoughts on your multi-cap and why and why one should invest in multi-cap, not in Motilal large cap, Motilal mid cap, and Motilal small cap kind of portfolio?
It also depends. See, the reason why multi-cap is interesting, and I say all the other schemes are also interesting depending on the risk profile of the investors. But why multi-cap is interesting? Because it essentially, the way we are going to construct it, it is going to be the house best idea stocks. So for example, our multi-cap, the differentiation that we are bringing is it is going to be only 35 stocks, right? So largely we'll keep it at 30 stocks. So 30 stock portfolio, although we have some limit to go to 35, above 35 will not go. 30 stock portfolio, India's most concentrated multi-cap fund, which is a key USP that we bring on table. So house most high conviction ideas will go in the fund. Whatever is the house most high conviction on large, mid, and small. So it effectively is the best ideas of the house portfolio. That's how we internally look at it. But for external world is multi-cap. But so all the best high conviction ideas will go here of the house. The small cap is something that this time I've been much more passionate on to build small cap myself. And the names that we have in our small cap, if they do well, then the 25% will take care of the 100%.
Nice.
We don't need, even if we have 75% cash, we should be fine. But we don't plan to do that. But I'm just saying that 25% that we are creating, we essentially want to buy stocks which we believe will give us 3-4x return over a period of time. And that 25%, if it becomes 4x, that's 100% for you.
Somebody wrote focused multi-cap, and I think it is the way you are looking at it. Niket, I must admit you have done extremely well with Motilal funds over the last few years. And the kind of turnaround we have seen as the MFD community at Motilal is really remarkable. I wish you all the very best. And recently, your
Thank
fund
you.
house raised 10,000 crores almost in an NFO. And I hope
Right.
that Motilal does extremely well with this multi-cap NFO, makes a lot of money for investors and also for MFDs. And with that, I will say thank you so much, Niket, for joining in, and
Thank
all
you
the
so
very
much
best
for
to
having
you,
me.
Bilal, and everyone else.
Complete pleasure. Thank you. Thank you, everyone. Thanks,
Thank you.
everyone.
Thank you. Bye-bye.
Thank you. Bye.